Good morning. I think good morning. Yeah, it says I'm live now. Let's delete that. Y'all is just me, you and me, Scott. Search the thumb. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes. In message. There we go. Okay. Morning, Chris. I'm going to get out of the emojis. Ooh, wow. Yeah, it's just a couple of people. I've got a huge, I mean, just, there are so many notes that I have, so many pictures, so many articles. Just, we're going to look at it. I mean, crypto, let me make sure this doesn't, that doesn't refresh. Get Weeble. Crypto, and the reason we're looking at crypto is because Michael Saylor confirmed he is literally burning 17,000 Bitcoin codes, the keys. So I'll explain that. S&P's most oversold stocks. Anything good in there? Robinhood, I'm starting to change my tune on them. Here are 10 stocks with elevator pitches for, the next decade. Interesting. The biggest losers. This is biggest losers, strong buys with 26% declines. Again, do you want to buy the dip? Invesco says U.S. government spending cuts are a far greater issue than tariffs. I also have mentioned that anchored VWAP yesterday. We went over that. It's interesting. And just literally what went on yesterday, U.S. blacklisted China companies. Microsoft slowed down data centers. Tariffs. Are they just a negotiating tactic? Well, they're going into place. Musk says Tesla isn't immune, so don't think that. Auto tariffs, I mean, if you got to remember, and Trump is we're heading into a tariff war. And it's just, it's nonstop. This was a great article. The crash of 2025, one chart that will flash a warning signal, and it's LVMH, is what they're saying. So the best part about dismal consumer confidence, it leads to buying opportunities. Goldman says buy the dip, and I'm going to read you this, but here's a strategy that makes you 109% back tested versus buy and hold. On SPY. Okay? This is on SPY. Buying an S&P 500 after a 5% dip, one of the market's most reliable short-term signals. Buy SPY when it drops 5% from the 50-day highs and exit 3 months later. And there's a strategy for you. It's awesome. And it backtests all the way to 2020. So, market crash ahead. More than half of Americans see stock meltdown on the horizon. The consumer is weak. And if you look at the 10 largest, what is that? Your friendly reminder that bullish setups are still alive. Is this what? No, did I put this in? I guess I didn't. I thought I posted this. Hold on. let me go to my Twitter. I thought I put it on Twitter. Let's see. Maybe I didn't. No, I guess I didn't. I think I just posted in Facebook. We'll go into Facebook. We'll go into the Facebook group. Go to news feed. We'll go into the private group. Yeah, there you go. And we'll look at that. Yeah, there's good setups. And here's some photos of the market from yesterday. We'll look at that. Morning, meat stick. Never thought those words would come out of my mouth, but morning, Mark, Wendy, Nicholas. Nicholas, I ain't giving you my thoughts on today. I mean, I don't trade day, so I can't. You know, we just got. I don't even know what happened, by the way, on the jobs report. So I can't really give you my Larry. I can't give you my thoughts on today. Your guess is as good as mine, Nicholas. So, what is DXY? The Dixie Group? I don't know what DXY is. Nicholas, did you mistype the symbol? But I got a lot to go over, so God, man, YouTube, when I watch myself, I don't know about you guys, other people on the live, but man, I get a lot of ads. And I did watch, if nobody knows this channel, it's Linus Tech Tips. Oh, DXY is dollar strength index. See, Nicholas, don't go and ask a douche on the internet, because I didn't even know what DXY was. And yeah, Jacob, I hope you got that MPLX straightened out. I'm telling you, when I called, I literally do nothing with MPLX. I know there is a form, and it applies to whether they made their money in the stated interest or not. If they made additional money, like on interest or something else, there's a higher tax rate. And so, yeah, I literally do nothing with that. So, yeah, I mean, Nicholas, that's you're tuning into a man who has done a great buy and hold. I did great trading in 2008, great trading in 2020, great trading in 2023. But during these bear markets, your guess is as good as mine. So, yeah, Jacob, just call. They're so good. I mean, they really did me a solid on that one. Okay, I'm going to hit. Let me just get rid of yesterday's. I usually like to get rid of the day before I start today's. I'm a minimalist, and I guess I didn't move it to the trash yesterday. But I am going to start. I hopped on late. I was busy watching crap. And Jacob, this goes for you too. Your first call should be to your broker, not to a douche on the internet. And I know it's because you bought the stock because, you know, I've owned it, but I literally don't do much with it. So I just buy and hold MPLX, and the dividends reinvest, and it's done well. I mean, you know, if the history of this one, if you look at a weekly chart on MPLX, it's great. And then you go over here and we type in MPLX, and we can look at the charting, select metrics. We will go to performance. We'll do total return. And I have held it since, I think, about 5 years. I mean, you can see, because I bought it probably around this time during the pandemic is when I started buying this. So it's done well. I don't expect that to continue, this type of overperformance, but I don't touch it. I don't sell it. I just let the dividends reinvest, so it continues to grow, and that's just a strategy for that one that I could have traded. I think the 4-hour strategy actually wins 52% of the time on this one. So if I were looking to add and build a position, I think what I did, perfectly honest with you, was I bought a shit ton of it at the beginning. It just in one swap because it was like a 17% dividend for the next month it was. And then it just continued to snowball, and I've held it. I take that back. I held it in my brokerage, which was taxable. And then I moved it. I basically sold it in my brokerage at a certain point. I think and then I rebought a similar amount that I initially invested. So I did take some gains on that one, but the initial investment that I did, whether it was $20,000, $30,000, whatever it was, and I just put it in there, and so it's grown significantly. Jobs number came out, GDP revised to up a tick. Wow. Okay, let's go back to QQQ. But that's been a solid one. And yeah, Berkshire's Berkshire. I mean, Berkshire will outperform. Berkshire is a safety. So when you get these kind of markets, Berkshire's going to get some inflows. And Berkshire is in the core portfolio, and it wasn't doing that great, but it's done great now. I mean, I think I just bought it and I was down. So, DMN. Damon, or is that the dollar? Ugh, no way, meat stick. It's a penny stock. Maybe it will. You can trade that one. It's not in my wheelhouse. I'm not that good. I mean, Fannie Mae, I haven't bought, literally I'm just buying the Qs and VOO and Alpha Picks, but everything else. Move this back to January. You know what? Let's move it back to April of last year. Let's go back here. Okay. Probably should get a glass of water, but oh well. I'm going to hit record. Good morning. It is Thursday, March 27th. It's still not April 2nd, and yet tariffs will take the market down. We're going to go over a lot. I'm going to give you some additional stocks that maybe you could buy and hold. We'll go over the past bear markets. What's the average length? Volatility. I've got a Goldman Sachs strategy. Okay, buying the dip, and it's back tested, and you can import it into Trendspider. So if you want to take the trial on Trendspider, you can do that. We had some ratings downgrades in the quant for the core portfolio. I'll go over several of those stocks. There's one stock that you want to take a look at because that may be the indicator as to whether we go into a recession. A ton more. There's a few stocks. I've got 10 stocks with an elevator pitch for the next decade, that kind of link. And then we'll go over crypto because Michael Saylor says he is literally burning the keys to 17,000 Bitcoins. It's like billions of dollars. And we'll go over the strategy there. The Qs yesterday felt bad. I mean, it probably felt bad. But this goes all the way back to April. Okay, let's take a look at this. I pulled the volume bar back to April. And look at where the volume shelf is. This is where people are buying. So where might you see a support level if we go down on the Qs? Maybe 471. That's about where we got last time. Okay? That green line is basically a trend line that I believe will either provide support or resistance. And it hasn't really provided a ton of support of late. Okay? We got up there, we got over here, but we've broken it. Now, is it going to provide support again? The MACD is right at the oscillator, but the signal line is at 7 points above. Go and research the MACD. Understand what that means. The RSI is at 43. Go and research and understand what that means. The Bollinger Bands, we're trading at the bottom. Go and research what that means. Go and research all your moving averages. We're right at the 50-day. Go and research what that means. The 200-day is at 387. Understand, the 200-day on a weekly chart is at 387. Now you bring that in and you go to the daily from the weekly, and the MACD is in a totally different place. The RSI, totally different place. Around the same, it's at 44. But when you look at the Bollinger Bands, we're right in the middle. Okay, we're right on the 9-day moving average. The 200-day is above us at 495. The 50-day is at 508. Understand what that means. Understand exactly what you're looking at on this chart. Don't take somebody's word for it. Go and research what that means. You can find YouTube videos. You can go to Investopedia.com. Understand what it means. The other thing you can do is look at pictures as to, this is a picture book. This is for a 5-year-old. What went on in the stock market yesterday? Tariffs. And then you scroll over and you can see the 200-day moving average on SPY and QQQ. We're right there. The anchored VWAP, we're right at the anchored VWAP and it's rejecting. And then again, a picture book. Who's he in a fight with? Mr. Trump is in a fight with Mr. Powell. Will interest rates go down? So this is your 5-year-old picture book of what's going on in the market. That's exactly it. Okay? But here's your friendly reminder. There's some friendly setups out there. Kroger with a flag breakout nearing all-time highs today following a strong earnings. KR. Go over to the symbol here. KR. Yeah, look, we haven't seen this one pull back. There are some stocks. If you took out the top 10 largest stocks from VOO, you're positive for the year. So it's those mega cap, it's the Mag 7, it's the tech stocks, it's everything like that that's bringing this market down. We're expanding out, so it's not a horrible thing. So when Trump, puts tariffs on these things, maybe it's not a bad thing that we're broadening out. And again, this is going to be a long podcast. It's going to be close to an hour. But let's take a look at we took a look at Kroger. Now, here's what I want. This is the S&P bear market length. Okay, 1929 doesn't really apply today. That's depression. 1937, again, depression. 37 months. We in 1946, right before war, 15 months, blah, blah, blah. The ones you want to look at are 2000, which was the dot bomb. That is a huge one. Okay, 1973, which was stagflation. That's 21 months. 2007, the housing crisis, 17 months. That's big too. 2020, throw it out, because that was just COVID and they threw money at the problem. Now, the rest of the world is putting stimulus. Germany's putting stimulus in there. China's putting stimulus in there. We're not. Okay? 2022, during historic rates, throw that out. But we do have a long way to go. And one of the problems is more than half of Americans see the stock meltdown on the horizon. When you get consumer confidence like this, it is very hard to come out of that. Okay, the online survey conducted in February showed 26% of respondents were comfortable with the current market conditions and were ready to invest a drop from 31% the previous quarter. That's a big move. Okay, read this article, understand what it is. And then, here, this one, well, we'll go into, let me just read this quote to you, and I'm going to take this out because, man, that's bright. Today was a reminder that despite recent rebounds in stock volatility remains as policy uncertainty lingers. Daniel Skyliff, head of Morgan Stanley's Wealth Management Market and Research Strategy team. Moreover, next week's tariffs deadline will likely be more of a starting point for negotiations than a conclusion, so the market may struggle to recover in a straight line higher. That means this little bounce right here may come down. I said it yesterday, and I'll say it again. I think bad tariffs aren't priced into the market. I think negotiations and tariffs coming off are priced into the market. So yesterday was clear, when tariffs went on, we will go down. Okay? There's a Goldman strategy out there. So Goldman Sachs put out this strategy and they said they've back tested it and it works well. Goldman calls buying the S&P after a 5% dip one of the market's most reliable short-term signals. And this month, it fired. So we ran the back test, buy SPY when price drops 5% from 50-day highs and exit 3 months later. That's what Goldman says. Over the last 20 years, the strategy has delivered. Position win rate, 72%. Average win rate, 8.17%. Average return, 3.815. Risk to reward, 1 to 15. And guess what? When you have Trendspider, you can get this. Log in and import. We're going to import this one, Goldman buy the dip strategy. This is a strategy, Goldman buy the dip strategy. And we're going to look at this one. So let's look at this. Goldman buy the dip strategy by Trendspider. We're going to put this in. You can run it on SPY. You can run it on VOO. You can run it on whatever you want. But I'm going to star this one as one of my favorites. Okay? Goldman buy the dip strategy. And we're going to run it. And here you can see Goldman says triggers right here, 576. And this is a phenomenal, again, buy the dip strategy. So import it. Just go to I'll have it in my newsletter. You can go and import it into your setup. Let me just go here. Back to this one. Okay. Buy the dip strategy. Here's the entry conditions. And it exit after 63 candles. It's as simple as that. It's as simple as just put the daily less or equal to 5%, 50-day high, and then exit after 63 candles. That's it. That's it. And over here you can see 106.2% versus 77.8%. Okay, positions 13. Got you in at 576. Where are you trading? 568. You're getting a better entry than the algorithm. So it's a strategy. Find a strategy that works. That's the key. So I'll put this into my newsletter. And here's, before I go into this one, let's just talk about some of the ratings downgrades in the core portfolio, because I like to look at Seeking Alpha. You guys know, if you watch, Seeking Alpha is my favorite, because you can just look at these quant ratings. Now, yesterday, I talked about how QQQ went to a buy. It went back to a hold, and it may flounder here. Remember, these grades that it gives are based on a 1 to 5 score. And so 3 months ago, the momentum on QQQ was A+. 6 months ago, it was A. You saw great things. We've dipped down. The momentum is now C+. And if you go and look at momentum, that's because these returns, the short-term returns, have changed. 1 month down 5%. That's horrible. So that hurts. Another one that got downgraded was XOM. XOM got downgraded. And again, it's because of the valuation and growth. But those were Ds before. So what else got downgraded? Doesn't look like anything, but it will change. And so these quant ratings, it doesn't mean that when you go from a hold to a strong buy, that's usually bullish. I've said it before. This is a $120 stock. Do I want to buy at 118? No. I wanted to buy at closer to 100, 105. Let's go back to the 4 hour. Okay? This one, we don't like that. 109. The algorithm got you in. You wanted to buy there. We're running right up against that 119 resistance level. So when it changes, it makes sense to trim your Exxon if you have Exxon. Okay, another one in the core portfolio is the Fidelity Blue Chip Growth. This is an ETF that I have. This is a sell. This went from a hold to a sell. And it's because momentum, dividends, and this is a high expense one. I don't suggest anybody has it. I have this for my parents. And the reason is just because it's done so well, and my parents love Fidelity, so we put a little bit of money into this. But again, there are other funds out there that are significantly cheaper. And FDMO might be a good one. FBGRC, there might be better ones out there. But this one I put in there just because it's a good ETF. So understand. There is the best part about consumer being dismal. Consumer confidence is going down. But the best part is a 10-point drop in consumer bullishness historically leads to above average S&P performance, indicating a likely market uptrend after a recent correction. Again, Goldman said it. We back tested it. The strategy that works. Do you want to buy now? I would say start entering in. And then there's this analysis, the crash of 2025, one chart that will flash the warning sign. This particular article goes over LVMH. Okay? They go over all this chart, and this is the one that I will highlight in the newsletter. This is what I will be looking at. Okay? This is the chart. Simply put, if LVMH breaches these levels, the market is strongly indicating we are going into a global recession, and therefore a crash is underway. As savvy investors in luxury will be the first to bolt for the exits. This will be one of the first buffalo to stampede off the cliff. If it doesn't, then the slump is probably not happening. It's the canary in the coal mine. And that's it's a thesis. It's something that's out there. It's something for you to watch. Because if you're afraid of us going down, there will always be signs in the market. It's just about whether you listen to them and whether you find them. And I've said this before on a few podcasts, many, many times. What we're looking at in the market is a distraction to actually what's going to bring you down. Okay? The markets may see a leg lower. You saw China. They said that chips might be limited based on power over environmental concerns. That's laughable. I mean, that's fighting the tariff war. And then auto tariffs. Trump put 25% tariffs on the autos. Okay? Trump warns of greater EU, China, and Canada tariffs if they plan economic harm to you. It's a tariff war. Consumers will pay more. And remember, in 2008, this is a whole list of the good, bad, and the ugly for the auto tariffs. But in 2008, when we had the housing crisis, what was the one area that Obama propped up? The auto industry. What's Trump now taking on? The auto industry. So Obama saved the economy by pumping money into the auto industry. It's that important to the economy. And Musk says, hey, we're going to see significant impact from Trump auto tariffs as well. He put it out on Twitter yesterday. So Tesla is not immune, even though it's the most American car company there is. And I've said this before. When you look at all the parts that are in a Tesla, it is the most American. I think it's 100% American. It might be a little bit off, but they're not immune because they have plants in Berlin. They have plants in China. So, and they're building one in Mexico. I mean, that's the thing. They're building a gigafactory in Mexico. So they're not immune. They're probably less affected. In pre-market, they're up. So, and then you've got a flurry of deals. This is what could take the market up. You know, the tariffs will take effect. They will on April 2nd. And then the hypothesis, again, nobody knows what Trump is going to do. Not even his own cabinet knows what he's going to do. I bet you his kids who are investing his life savings, they may know what he's going to do. And he may be telling them, hey, it's a negotiating tactic and we're going to take it off. So given the meaningful impact of tariffs across the automotive industry and the broader economy, we expect a flurry of activity to the latest announcements from companies, governments, industry, lobbyists, and other parties. Murphy noted that Japan had already requested an exemption, and other nations are likely to follow. Reciprocal tariffs. That's what he's doing, but it's going to hurt your pocket. Now, what do you want to do during these times? You want to buy. But then you have AI being taken down because Microsoft scrapped some more data center plans. And so you've got this slowdown in spending on AI. And again, you may be thinking tariffs are the bad thing, but then you've got slowdown in spending because the consumer is weak. They're not buying Microsoft products. They're not going full on into Copilot. So you've got all of these things adding up. Okay, and then the U.S. blacklisted 50 entities to restrict China's growing AI capabilities. Remember, I said this. A lot of the NVIDIA chips that were sold to Singapore shell companies that most likely entered China. So what did the U.S. do? They restricted NVIDIA and other chip companies selling to those shell companies. And that is going to affect sales. Okay? And I mentioned anchored VWAP yesterday. Why does it matter? This is one of those pictures that I showed. Rejection, the levels marks the average price since the market's peak. Okay? And you can take a look at these charts. We rejected. So that's the all-time high. Rejection here suggests overhead supply as trapped buyers sell into strength, potentially fueling the next leg lower. So what happens is, it's market psychology. You have all these people up above. And what do? They start panicking. Oh my God, we're not getting back to all-time highs. Tom Lee was on CNBC, but this guy has been wrong 50% of the time. I'm going to sell. They can't sleep at night. And so they sell. And that rejects further selling. Okay, so when you get up to that, they start selling. So you do want to know your volume profiles of the stocks that you own. You do want to know things like that. But again, find a strategy that works. Invesco says U.S. government spending cuts, far greater issue than tariffs. Remember, not only are you charging the consumer more, you're also laying off 400,000 people to shrink the government. Those 400,000 people need to find jobs. And so the one thing that's been held up through this market is the jobs. If the jobs market falls, then the Fed, remember, don't fight the Fed. I heard this on a podcast yesterday or on CNBC, I forget where. But there were people who were saying, hey, don't fight the Fed. Understand that rate cuts may not happen just because we see things going well. Rate cuts might have to happen because we see things poor. And maybe the jobs market is the one that falls. Maybe inflation starts to creep up or stays where it is, but the jobs market is what falls. So don't fight the Fed. Maybe that's not a great thing. So where do you buy the dip? Here's 5 stocks. Steve Kress. Strong buys with 26% declines. If you buy good stocks with good products, with good management and good profits, you can find opportunities. And yes, they are all getting taken down. They were down huge yesterday. But you want to find a strategy. Let's just take, for example, AppLovin. This is one of those that's on the list. And you can see the algorithm got you in at 272. You're trading right now at 320. You still have a positive way to go. You lost confirmation. Maybe pre-front and take your profits. But with stocks like this, you can typically see a nice strategy. Look at the Bollinger Bands. Okay, look at this chart. I said go and research Bollinger Bands. Bollinger Bands, when they cinch up, when they contract like this, it usually means, and you can see it back here, that you're going in a direction up or down. The guess is yours, but you can use moving averages to tell you the direction. Now, your 200-day is moving up. That's long term. Your 50-day is moving up. That's medium term. Your 9 and your 21, if you get below that, that's short term. That means you may have short term down. You can see them cinched up here and they moved up. Right now, you're trading right in the middle of the Bollinger Band. The MACD is a little high. The RSI is at 53. So you have to make your determination. And again, these are good companies with good products and good earnings, good fundamentals. And we can go and look at AppLovin. It's a strong buy in the quant. The only thing that's against it is the valuation. But if this momentum starts to go down, like you see the 3-month performance, the sector is down 11%. AppLovin is down 5%. It hurts. But it's not something that's the end of the world. Again, you go back to that Goldman Sachs. When you just exit 63 days later, you do well. So there's 5 stocks for you to buy the dip on, okay, that are fundamentally good. Here's 10 stocks to hold for the next decade. Amazon is one. I've said it before. If you can get Amazon under 200, it's at $200.50. If you don't have a position in Amazon, start buying. Don't go balls deep in there. Say you have $1,000. Buy $50 today. Okay? Buy $50 this morning, $50 this afternoon. And if it goes down, even better, because you have more money on the sidelines that you haven't spent, and continue to buy. Find a strategy. Maybe go for the daily. You want to put $100 in while you're above the 9-day. Maybe that's something that you want to look at. But find stocks. Nubank is another one. Currently operates in Brazil, Mexico, and Colombia. I don't have this one. Strongest balance sheet among growth companies, $6.8 billion in cash versus $2 billion in debt. We can go and research that one. You just want to find stocks that you can buy for the long term during this. And the valuation sucks. Momentum sucks. Revisions suck on this one. So am I buying this one? I want to find a strategy that I can enter into this one. Maybe it's just one that's a foreign bank. 4-hour algorithm makes you 71% over the last 24 months. 43% win rate. Am I okay with that? Well, you go to the weekly. We're down below on the MACD, the oscillator on the MACD. Maybe this is one that starts to turn around. But you want to find previous highs that provide support and resistance. And what I see here is if I pull this, we're not going to use this as the volume. We're going to pull this back to, say, right about here, the last pullback that we saw in March of 2024. Where are people buying? This is where people are buying, right where the big names are. So if you pull this back to the last time that the Bollinger Bands really contracted, right there, then where you got a big volume shelf down here at $8 and it's trading at 10. And between 10.17 and $8.38, you have no volume whatsoever. because people haven't traded in there. So what are they going to do? If you break this support level at 1017, people are going to start panicking and they're going to start selling. And then you get down here at 826 and you're like, oh my God, it continues to go down. Well, wait until it gets some good fundamentals. And at $8, these fundamentals, the valuation and the momentum's still going to suck, but maybe revisions on the earnings per share come up. Maybe revisions on the revenue come up. Google, I've said it before. I think Google is a great long-term investment. So again, find these opportunities. Find something that makes you feel comfortable. Understand that you will need to sleep at night. And if you're not sleeping at night, it's not for you. Okay, so I just gave you 15 stocks to research. Robinhood unveils new premium service, including wealth management. I'm changing my stance on Robinhood. I still hate the app. I still love Webull. But I'm changing my stance on Robinhood. Now, it's a strong buy in the quant. It's kind of flat today. Their valuation, it is stretched. It is significantly stretched. For a wealth management, investment banking, brokerage, this is, it's expensive. But that's their growth is impressive as they continue to get millennials. One of the wealth management tools that they're doing private banking stuff. For if you have $100,000, your wealth management is essentially free. They are attracting some of the millennials, and I think that's what's moving there. It's not not me, not the multi-millionaires. It's the millennials that want to bet on college basketball with their IRA. And sorry, JP Morgan, sorry, Fidelity, sorry, Schwab. That's the future multimillionaires. And so if Robinhood can get people in there that are used to using their app, that are used to using their services, that are used to that and feel comfortable, you don't change banks every 6 to 8 months. Maybe you change banks 6 times in a lifetime. And maybe you don't change banks at all as long as they are providing you services that you're used to. That's what Robinhood is looking for. So I'm changing my mind on them, not because I think it's a great company, but I think because, they're attracting these people and they're staying. And so, as they throw more tools in there, I think they'll do well. So I'm not changing my tune on it. Find a strategy that works. We can look at Hood right here. We can look at that one. Got you in at 39. It's kind of button hooked over. And yeah, in my on my newsletter, I do tell you what a button hook is, but it's button hooked over. The high up here was, let's see, 49. So you take a look at a weekly chart on this one. It's still up there on the MACD. We've just come back down to the 50 level in no man's land. Now, one that worked on this one was the 1 hour strategy. Got you out with a 1.87% gain. Okay, this one over the last 61 days made you 30%. If you bought and held Robinhood, you're down 13%. So maybe in the short term, that's a strategy you want to look at. And I provided that free in the newsletter. So all you do is go to the newsletter, and this is yesterday's newsletter. Go to the top. Here's the stock battle strategy, 1 hour strategy. You can import it and trade it. And again, if you click on this, take the Trendspider on a 14-day test drive, for $20, you can trade this one in the 1 hour algorithm. Okay? And then you can go over and look at all the quant ratings in Seeking Alpha Premium, and you get a free 1 week trial. So for 1 week, for $20, you can sign up for Trendspider and you can sign up for Seeking Alpha Premium and try it out for 1 week. And it's $20 freaking dollars. Okay. You have to sign up separately. Now, if you want Alpha Picks, that's the curated portfolio. I'm coming up with a new strategy for Alpha Picks, but that's one. But again, in the newsletter, you get all of this. So go to dailystockpick.substack.com, sign up for the newsletter. Let us help you grow. It's as simple as that. It's very, very easy. So if you're nervous in this market, I would suggest you at least take a week trial of those things. Okay? I said it at the beginning. Go and research the moving averages. Go and research MACD. RSI. Here's the S&P's most oversold stocks, including Nike, Starbucks, Target, and more. Now, do you want to get into any one of these? You can, if you don't have Seeking Alpha Premium, just go over here, okay? And we're going to go to this is FinViz, finviz.com. And you're going to take this, go to the screener, go to S&P 500, and then you're going to go over to technical, okay? And we're going to look at RSI. And we're going to say oversold. Oversold 10. Now, there's nothing down at 10. Let's look at 20. Let's look at 30. There you go. EPOM and Nike. And so you can take a look at these and understand that you're going to need a chart to look at these. Okay, let's go look at Nike, since it's the most oversold stock in the S&P. And look, that RSI down there, we'll just go to a daily, because that RSI is currently at 26. And so then you'd say, oh my God, everybody's selling this one? Well, I want to buy when everybody's selling, don't I? Well, go and take a look at some of the fundamentals. And again, that's why you go to Seeking Alpha. And when you look at this, you can pull up the Analyze with AI, okay? And then you go to valuation, because it's a D. It's stretched with price to earnings of 32, substantially higher than the sector at 17. Additionally, its price to book ratio is 8, drastically exceeding the sector, a median of 2. And its growth are concerning. Profitability, strong profitability. It doesn't have a problem making profit with what they sell. But the momentum is mixed, with a one-year performance of minus 33%, underperforming the sector median of 16%. Revisions, mixed. 14 revisions are up and 10 downward. You don't want to buy into a sinking knife, and this one is a sinking knife. So you say, well, maybe I want to go into something else. What's 4 out of 10? What's the 1, 2, and 3? It's on, Birkenstock, and Deck. And Deckers is one that has fallen off a cliff. Mike's asked me about this one this morning. Here's Deckers. Is this one low enough? In a market where the consumer may, and I say may, be stretched, and their earnings weren't that great, because look at that gap down, and we've continued down. Is this one going to be great? Well, look, the valuation is still stretched. Okay, go and analyze with AI. And we can go down here to the Seeking Quant ratings explanation. Validation is stretched, right? Price to book of 7.27. Growth demonstrates robust growth. They got a C. Okay. Profitability showcases excellent profitability. Momentum sucks, with one-year price performance of minus 19. This was a high flyer. Go and look at a weekly chart. We're coming down to that 200-day on the weekly. Okay, the 50-day hasn't even turned negative. Your RSI is at 28. Fundamentals matter. So when you're looking at these most oversold stocks on a technical level, understand they're oversold for a reason. And if you don't have that article, you can just go over here and look at these stocks. Okay, look at the 20 level. I'm sorry, let's look at the 40 level, because the 40 level brings all these up. You're oversold. And so understand exactly what that means. Now, let's talk a little bit of crypto, because Bitcoin, if we go over here, and I'm going to go to my Bitcoin watch list, Bitcoin and crypto, and we're just going to look at Bitcoin. Okay, 4-hour algorithm got you out yesterday, 0.4% loss. If we go to a weekly chart on Bitcoin, it looks weak, but we've identified this previous all-time high in March of 2024 as perhaps a support. It has held up as support. Look at those 3 candles this particular week on March 10th. Guess what the low was? 76,000. You're right above that 72,000. Okay? Guess where the 50-day is on this weekly chart? 76,000. It held it. The MACD still not done going down. Okay, the oscillator, you're what? 2,000 points above the oscillator? Your RSI is at 50. Yes, you can track crypto like this as well. Charts work on crypto. And Michael Saylor says yesterday, He confirms he's burning the keys to over 17,000 Bitcoin, worth $1.5 billion. He calls it his legacy. So understand what this means. What this means is there's a limited amount of supply of Bitcoin. So there were two ways of driving the price up. The first is you buy everything, okay? That and then everybody saw Bitcoin going up and Michael Saylor's buying everything, and he makes a presentation of Microsoft, and then GameStop just buys authorizes, hey, we're going to buy billions of dollars and we're going to compete with MicroStrategy on this. And Saylor says, you know what? I already own a bunch of Bitcoin. What am I going to do? I'm going to burn the Bitcoin that I have, which drives the price up. So he can never sell those Bitcoin. Those Bitcoin are out there. They're never going to transfer ownership. So it's not like he can take a loan out on those Bitcoin, but his other Bitcoin and the Bitcoin goes up because it's supply demand. So he's driving the price up. Okay? Is this a bit, remember, demand is going to be there. If it goes away, yeah. He just lights it on fire. And then this particular article, this goes over the Seeking Alpha quant ratings on all the Bitcoin stuff. So there's GameStop, there's Strategy, there's Block, there's Coinbase, Hut 8, Mara, Riot, Tesla. And it goes over the quant ratings for all of that. So again, have your tools available. I don't think we're done going down, but the best strategy that I've seen so far is that Goldman buy the dip strategy. So if you want Trendspider, if you want everything else, I'm not going to call that today is going to be a good day or a bad day. April 2nd is D-Day. I've been saying it. I've been very conservative on this bounce. And we may have further to go. We may not. The douche on the internet may not know exactly what's going on. But when you look at weekly charts, we're still a little stretched on some metrics. Now, when you go out further to monthly, the NASDAQ could come down a long way. You could still have 20% down. You could be coming back to the 2022 highs. I don't think that Trump will let it get that way, but sometimes you don't have control over it. And sometimes you just go too far. So I'm a little concerned, not overly concerned. I'm not selling out of anything. I do believe that it's a correction, not a recession. But earnings coming up, you have April 2nd, and then you have earnings coming up after that. These are the cliffs that we have to go over. So if you have any questions, you can certainly hit me up. Linktree is right here. Remember, the tools aren't there just for bull runs. The tools are there to protect your portfolio. And so QQQ, if you're looking at, when I get in and out, QQQ makes you 51%. Okay? You make 58% with a buy and hold strategy. That's not a big difference. You win 53% of the time. Here's the deal. Look at this. If you wanted to trade this strategy and just make 51% over the last 2 years, you'd be perfectly happy with that. If you can't sleep at night, it got you out here at 524. You could have sold a bunch at 524 and said, I think Trump is serious about this stuff. That's what this was developed for. The 4-hour algorithm was developed around COVID. I didn't want to lose 40% of my entire portfolio. I wanted to protect myself. Now, have I sold on this? No. My strategy until we get to a bear market like 2022, if you look at 2022, that was a bear market. Right here, you saw that drop. We can go over 2022. Let's see the drop of 2022. That's November 21. And we go down there. That was 34%. Okay, we can take this back to COVID. Did you have time to get out? You certainly did. 30% down. I was in the Mag 7 and they were down 40%. But you want to make sure that you have an opportunity to get back in. So that's what these tools are there for. They're not just for bull markets. It's not just to find the high flyers. It is fine to try and protect your strategy as well. So if you have any questions, Linktree has everything, or you can sign up for the newsletter. Let us help you grow. But Linktree has the link to here, Trendspider, where you can get the trial for 2 weeks for $20. It has here the bundle offer, which includes premium and alpha picks, or you just go down one more and you get $30 off and a free 7-day trial of Seeking Alpha Premium. Alpha picks is the portfolio. And if you don't have a desktop and you can't do charts, at least get a chart on your phone. And that's Webull. And you can set up a strategy in Webull, just by looking at the charts. Yes, you have to look at the charts. You can set up alerts in Webull, but the alerts in Trendspider is like taking the training wheels off and riding your bike for the first time. That's the best that I can tell you. So, okay, I'll be back tomorrow. You guys have a great day. And let's hope we turn around a little bit. Let's hope it's negotiation strategy. Okay, see you, bye. Morning, Eli. Manitoba strings, I've done it, the incline. I don't want to do it again. It is a great, I suggest anybody that goes out there do that. And do Pikes Peak. Climb up Pikes Peak. I have done Quandary, Bierstadt, and Grays and Tories on the 14ers list. No, I didn't make it up Tories. I made it up Gray. I made it up Grays. I didn't make it up Tories. We did that. My buddies did the loop to Tories. My knees couldn't take it, and I had to turn around. And I got lost on the way back and wound up meeting up with, it was snow covered. It was a hell of a climb, let's say. But Manitoba Strings is great. It is awesome, and it's quite a workout. The way up doesn't bother me as much as the way down, and it's because of my knees. Usually I'm pretty good on the way up. I'm usually faster than most people, but it's the way down that's bad. So, okay, it's 9:30. The market opened up. Let's see. Oh, my dad just sent me from Carvana. They're offering him $33,000 for his Model X. It keeps going down, but let's see. Fidelity. Wah, wah, wah. Am I hurting too much? Oh, it's not bad. Down 0.41. It's shitty, but it's not horrible. Oh, my stuff in IKEA probably showed up today. Eli has a question. I would never buy Nike either. I don't wear enough Nike that it makes sense for me to even buy it. So, I'm not a huge Nike fan. I hope Mike hears that I went over Deckers for him. And just so you know, part of the reason why I haven't been doing social requests recently, other than a few people, I don't have a lot of confidence that, there are good setups in the market, but I'm a large cap tech investor, and that's I learned my lesson with the podcast over 2022 is, don't overpromise during if we start heading into a downturn and I start, overpromising, I feel bad. And it's not like I'm responsible for anybody's, buying and holding or anything of that sort. But I do feel responsible when I make this one is the one that I'm going to buy. Let's see. This is 327 pod. No, Eli. The Vanguard. What I would do, there's two ways I would do that. I would either look up, they should have a symbol. Like I know those target date funds sometimes have a ticker symbol, and you can look up charts and things like that. But they should have their performance within Vanguard. I got out of Vanguard. I didn't like Vanguard. It wasn't anything other than I was in a 401k that was going to charge me fees when I left a job. And so I took all that money and I invested in like Apple, Google, and stuff like that. So I just, for me, it's always been about the individual names and the ETFs that I know are good. But Vanguard has some, VOO and VUG. And those things, typically you can buy those in retirement accounts. But I would call Vanguard and ask them, or just ask Perplexity. Vanguard's usually pretty good about customer service. I've had good experience with Vanguard. They made it nice and easy for me to transfer over to I think I moved it into either TD Ameritrade or Merrill Lynch. I've had all these brokerages, so I've had all of them. Yeah, Jacob, it's safeties. It's just, FinViz isn't going to have the up-to-date stuff yet. But it's safeties. You look at the top winners. We'll just look at a screener here and look at the S&P. And you look at, it changed all percentages. But, let's look at technical performance. Let's say month up 10%. Yeah. Look at what's up 10% in a month. Utilities, industrials, communications, utilities, basic materials, utilities, Intuit, technology, industrials, consumer defensive, Monster, basic materials, industrials, healthcare. That's up 10% in a month. Okay, if we go up 20% in a month, there's nothing. There's nothing in the S&P that's up 20% in a month. Now, if you go up to, I guess you can't, if we just go up, month up, you got a much larger list, much larger list. So it makes sense. Again, you kind of pick your poison in markets like this. Is do you stay with what you have or do you move? I typically stay with what I have, This is funny. This one's Axon is actually up in the month. Is that one defying logic? I watch body camera footage on YouTube all the time, and it's always Axon. That's what's interesting. This one isn't immune to the down, but it has held up pretty well. It's a buy. It remains a buy. Let's see. Was it a strong buy ever? No, it's been a buy. Just moved back to a buy. So, it looks like it moves between buy and hold here. So, what's KMB? Oh, Kimberly-Clark, yeah. They are a consumer staples, I think. Yeah, household products. They make, let's see. I know there's brands that you probably use in there. Huggies, Kleenex, Scott, Kotex, Cottonelle. Depends, which I will need in my older age. Pull-ups, Good Nights. So it's just a, I don't think I've ever owned this one. Probably in an ETF I've owned it, but I don't think I've never traded this one. Put it this way, it's not one that I think trades, the momentum, it's a B. You're up 4% in 3 months, 10% in 1 year. I think it's beating the S&P. So yeah. Yeah, Jacob, I mean, that's the thing is, and it's funny, as you get older, specifically me, as I get older, I find it hard to move my thinking away from growth. And that's what's hard. And Leon Cooperman, who is just go and Google, Leon Cooperman. I guess, yeah. Leon Cooperman. The Wikipedia page, this guy. He is fantastic. And he constantly is talking about the Nifty 50. He was born in 1943, American billionaire investor. He is the Warren Buffett type. I love watching him talk, and net worth 3.6 billion. So he's not, the richest man in the world. But he talked about one day, I remember it was post-pandemic, I think it was 2021, and he was talking about he had gotten rid of his Honda Odyssey. He said, my Honda Odyssey has seen better days. So he went out looking for a new minivan. Now, the man is worth $3.2 billion. You'd think he'd have an assistant go out and look for a new minivan. No, he went out looking for a new minivan. And they asked him, well, you said it's on its last leg. How long have you had this minivan? He goes, 13 years. He had a Honda Odyssey for 13 effing years that he drove. And he said, I went out looking for a new minivan. I went to Honda. I didn't like what I saw. It wasn't a good deal. He goes, I got a better deal on either a Kia or a Hyundai. I forget which one he bought. The man's a billionaire and he bought a Kia or a Hyundai. So he often talks about the Nifty 50. And you can Google the Nifty 50. We can Google that. Let's go to Perplexity. And let's see, what are the Nifty 50 stocks? And I believe it's going to come up with the answer is nobody can identify the 50 stocks. It did come up. Flagship index of India. Oh, no. Let's see. No, we're going to delete this one. Delete. What are the Nifty 50 stocks of the 1970s American Stock Exchange? We'll ask it that. I think that's more. I think it's going to come up. You can't really identify them, blah, blah, blah. But there's, name one. Let's see. There was no official list of the Nifty 50 stocks. The following companies were often included: American Express, Coca-Cola, Walt Disney, General Electric, IBM, Johnson & Johnson, McDonald's, Merck, Pepsi, Pfizer, Procter & Gamble, Walmart, and Xerox. Yeah. And many of these stocks traded at PE ratios of 50 or higher, far above the long-term market average of 15 to 20. It's important to note that while many of these companies remain successful today, some like Polaroid, Eastman Kodak have struggled to become defunct. The Nifty 50 phenomenon ended with the bear market of 1973-1974, which was marked by political scandals, rising oil prices, and increasing interest rates. Sound familiar? Political scandals. Anybody know about a texting service called Signal? Rising oil prices. Because you saw that mentioned in the Signal chats. And increasing interest rates. We just went through that. So, again, the biggest predictor of the future is history. I'm not doing anything, and I'm not saying that we're going into a bear market, but yeah, Eli, if you buy Kimberly Clark, you have to start. You have to get your depends. I will tell you, there was a time when I was, I'd say, in my 30s, where we were going to a festival, and I remember thinking, I don't want to use the outhouses. And so I brought up to my friends, we should just get diapers. Nobody's going to know. No one's going to know. Didn't wind up happening, but it was a thought. So I've been there. Okay, with that, I'm out of here. When we start talking diapers and stuff, I'm out of here. I will talk to you guys tomorrow. See you, bye.
And fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.